Let's talk about earnings which are lined up today. The key one, of course, being SBI. Kajal Gandhi from ICICI Securities on the phone line with us. Kajal, hi. Morning. Good to have you on the show. Everyone's just wondering as to what the slippage number from SBI is going to be. What's the number that you're working with?
So good morning. Slippage can be on the higher side from the perspective that DHFL is coming into everyone's NPA this quarter. So we may see the normal run rate of 7-8,000 and then 10,000 crore approximately adding from the DHFL slippage. So slippage can be higher on the 18,000 or 17,000 kind of side, but what we are expecting is the SR still recovery to offset that slippage. That should also be closer to around 12 to 13,000 crore. So on a net basis, we should not see gross NPA rising. In fact, on a percentage terms, it can come down like 15-20 basis points. It can come down on a percentage basis. So slippage can be higher, but that's not the only number to look at. Maybe because the recovery, we should look at it in a more proper manner, and maybe NNPA is what we should also look at, and that will also be slightly on the downside, we expect.
Kajal, do you feel the SR recovery is already in the price? That's the one positive the market's watching out for, but is it largely factored in?
But at least recently we have seen the price correcting a bit, so maybe that may be earlier in the price, but the recent correction was quite sharp. On an overall basis, if you look, if there is nothing more than these two things what we are talking about, SR and DHFL, then the stock has corrected actually slightly more and it should recover. If we are seeing more to the watch list or more to the NPA side, maybe the telecom exposure or anything of that sort which SBI brings in, or something more on the agri or anything, then it can be a slight dampener. But otherwise, what we believe is if the numbers are only to this extent, then it should be a recovery.
You know, everybody is excited about what is happening to SBI and the subsidiaries. SBI Life, SBI Mutual Fund, SBI Credit Card, which will go public. Why are markets still treating SBI as a bank? Nobody really talks about they are the biggest credit card company in India, they are the biggest insurance company in India, they are the biggest AMC in India now.
No, so true, they are the biggest companies. The subsidiaries are in fact fairly large, in fact much bigger than other companies, other financial companies which may be listed. But the only point is because SBI bank is so large, it's such a like almost 10 times the second bank kind of numbers it has. So if that is the case, you have like 20 lakh crore on the balance sheet on one side. So if that is the number, if you look at the SOTP, the per share valuation for all these subsidiaries come down. They are not very large. So that's why the reason that SBI bank holds a larger value in the entire SBI which is listed. So even if the other subsidiaries are listed, the overall per share for SBI is quite low.
The difference in ICICI Bank and SBI is very large. I'm not requesting you to comment on ICICI Bank, but all I'm saying is that if ICICI Bank, which is a corporate bank, has got re-rated, why is SBI not getting re-rated? You know, this question has been puzzling me from last couple of months. First, I thought that, okay, retail banks are going one way, corporate banks are going one way. Now that Axis and ICICI Bank have made a comeback, will it be reasonable to assume that if not today, tomorrow, if not tomorrow, maybe some other day, SBI ka bhi din aayega?
True. So that's what we also believe, that SBI should also get re-rated. It's only that the PSU angle which keeps the multiples on the lower side. But still, if the numbers FY20 are closing and if this quarter we see that large recovery percolating to bottom line and even next quarter to be a good quarter, then this year numbers should be strong, and the next year numbers are expected to anyways be pat closer to 30,000 crore. If anything closer to that we are going to achieve in 1 or 2 quarters in a consistent basis, I think surely the stock should get re-rated. re-rated. The only thing is some or the other account keeps coming in. So now once the DHFL is over, we have the telecom thing which may come. Those exposures for SBI are also long and large. So that keeps the overall earnings slightly subdued, which markets factor that something or the other will keep on coming. And the social angle. So possibly just because from that your multiples keep lower, but there is an FD possibility and we believe that it should get re-rated and should be on the higher side from where it is trading right now.
With you, and we'll speak once the numbers as well are out.